Hi, this is Omar Shakir. I'm the CFO for Trendtech, and you're listening to the CFO Thought Leader Podcast.
This is episode 1090.
So in the coming years, when I think about our financial goals, number one, and on many earnings call, you'll hear me talk about we want to continue to buy back our shares. So this is on the financial side. We want to continue to buy back our stock. We believe we're trading well below intrinsic value for the economics and for the intrinsic value this company represents. You'll continue to see us retire some debt. At one point in time, this company was over leveraged, so you'll continue to see us retire that debt. We want to continue to build our holding company cash position and have a very strong holding company cash position. And then our financial goals, when you think about CareScout services, we're building businesses. And my experience in business development is it takes time. We want to scale these businesses, and over several years, we want these businesses to become profitable and provide a great return to our shareholders.
Jerome Upton still remembers the silence that descends just before a game begins. As captain of a college team, he'd scan the huddle and gauge the players' nerves. That's where I learned the power of shared goals, Upton tells us. Years later, the Genworth Financial CFO opened staff meetings in a similar fashion before providing teammates the room to execute. Or so you'll hear on today's episode. Our talk with Jerome Upton begins after this.
When it comes to company spend, most finance teams are on defense, reacting to surprise spend, chasing receipts, saying no. But there's a better way. Meet Brex, the AI-powered spend platform that boosts a company's control, earnings, and speed. 99% of customer spend is compliant. 11 million hours saved on expenses and accounting through automation. $681 million plus dollars back to customers in business building rewards. Make every dollar count with Brex.
Hello, we're speaking with Jerome Upton, CFO of Genworth Financial, Fortune 500 company, insurance products, financial products. Jerome, welcome.
Jack, I really appreciate the opportunity you've given me and look forward to the discussion.
Wonderful. Jerome, we're going to ask you to look back. We always love having our guests begin by taking us back in time, getting in the time machine, sharing with us, where did they get the preparation? Where did they, understand that they could advance into a finance leadership role? Where did that happen for you? Take us back.
Well, Jack, if I get in my time machine, so to speak, I think we're all the culmination of all of our experiences, and some personal and many professional. And I have to start my journey and my story with, since I was a kid and all the way through college, I got to play team sport. I was fortunate enough to participate actively in team sports. And that is what a formative development activity for me, and taught me all about teams and how important teams are and how establishing goals and then aspiring as a team to achieving those goals. It was a very important developmental item for me. And I got to be a leader, a captain on some of the teams that I participated in. And I find myself to this day, as the CFO of Genworth, reflecting back on those sports activities and reflecting back on many of the comments that were made by my coaches. And I have to highlight that was something that I felt like I needed to start with. It's a personal experience, but it was a very important item for me as I began my journey into finance leadership and ultimately the CFO. So I would start there. I would then highlight that I got an accounting and business management degree, and I went to work for a very small insurance company. But it did not take me long to realize that I needed to broaden my horizons. If you had asked me back then, did I want to be a CFO of a company, I would have answered categorically yes. And I knew that I needed to broaden out, and I was afforded the opportunity to work with one of the big four accounting firms. And the firm was KPMG. And back then, jumping out of industry into public accounting was a risk I was willing to take. And I had many people that came to me and said, what are you doing? You had a nice job with an insurance company. You're jumping into public accounting. But fundamentally, I knew I had to broaden my horizons, and I had to check that skill set of having really strong financial reporting and accounting skills and capabilities. So I spent 8 years with KPMG, and that was very developmental. I got to see different industries. I spent a lot of time in insurance, but I got to see different industries. I got to work with different partners, some very smart people, and it was a very developmental opportunity for me. So I'm glad I took that risk, made that jump, because it broadened my horizon and was one of the inflection points that I would highlight for you on my career journey. I was working with a client, which was the predecessor of Genworth, the GE Capital. They offered me a divisional controller role. And so I jumped out of KPMG, out of public accounting. I spent 8 years. I took the divisional controller role. It was a big role within the company. It taught me many things. But what it really allowed me to get into is sort of the second inflection point in my career. And that was, I got into international finance. I was an international finance leader. I'm going to combine things for you here to keep this and give you sort of the high level version of my journey. But I got into international finance, and that was so important because it took me out of sort of looking backwards in the financial reporting, accounting, and it allowed me to check some other boxes around financial planning and analysis. I got into FP&A. I got to see some international markets. I got to work with some really good people. I actually did some investor relations work as part of that. And in that role and some succeeding international roles that I had, I got to execute on the capital markets transaction in some foreign jurisdictions, which was a very broadening experience for me. And I also got into some board seats on these companies that we own. And so early in my career, this is pretty early in my career, I'm sitting in a board environment as an international finance leader. And Jack, we're talking strategy, and we're talking operation, and we're talking technology. And I'm sure I wasn't the best board member in the world because I didn't really have the nose in, hands out mentality that you really need to have as a board. But I would highlight that as a very developmental part of my career as well. It gave me perspectives that I didn't have previously. It gave me more connections with the CEO of Genworth, with the board of Genworth, and it allowed me to continue to grow and develop in this company. I became a divisional CFO. I then became the deputy CFO for Genworth, and then ultimately the CFO. So I would say this company has given me great experience. I'm so pleased with the experience I have. I get to work with a lot of great people every day. I have a great team, and this company, Jack, has a great mission and purpose, and that's why I've been with the company over 20 years.
Your first chapter was very powerful because I think it defined in so much who you would be years and years later as you managed teams and as you led teams. And again, you were at KPMG, as you explained, for 6 and 7 years, but then you stepped back into industry. Can you tell us a little bit about that decision? That seemed to have been a big decision at that time.
It was a big decision, Jack. I can tell you that it was really a nice opportunity that I felt like I couldn't turn down. I thoroughly enjoyed my time in public accounting and developed a lot of good technical skills and worked with a lot of good people. But this job and this opportunity to take the divisional controller role, I felt like would help me. It was a much bigger job than my first job. I just felt like it would help me continue my journey to the CFO path. And that's why I took advantage of that opportunity and joined the company.
Can you tell us something, a contrast here between KPMG culture and GE finance culture? I mean, I have to believe that there were certain responsibilities that came with being that controller. And very frequently there are deals that are being done, and the controller is the one who has to say, hey, wait a minute, this doesn't, isn't working out totally well for us. Take a look. Let's take a hard look here. Are those the types of experiences you had, or no, that's not what you remember?
Jack, the first thing that comes to my mind is coming out of public accounting. It is a role where you're pretty technical. So you spend a lot of time being a technician. Yes, you're managing teams, but they're small teams. And what I would highlight for you is when I jumped into the divisional controller role, my team was exponentially bigger. And it challenged me because I came out of a technical role. And even though the team is the most important element you're leading, I came out of that technical role. I had a much bigger job with a much bigger team, and it stretched me from it began stretching me from a leadership perspective. And I quickly had to learn that I had to rely on my team because I could not cover everything. I could not touch everything that moved. I knew that I had to rely on my team, and indeed I had a good team at that point in time. That was the biggest difference and challenge for me.
Was it always financial products after leaving KPMG? Was it always the world of finance?
Well, it is finance, but it's more specifically insurance.
Yeah.
So that is, I've been with KPMG, I got broad experience, including banking and insurance. But for me, it's been financial services and more specifically insurance during my career.
Never looked at beyond that industry. Never felt, you found your home, you found your groove.
I found my home. Listen, GE Capital was the predecessor of Genworth, and GE Capital spun us off. So when I give you my 20 plus years with Genworth, that includes my tenure with GE Capital, which used to own Genworth.
It sounds like you're stepping off the mothership then and stepping into, who knows? Was it just a wonderful opportunity, an obvious opportunity that you would take?
So to me, this was an opportunity I couldn't turn down. Why do I say that? This opportunity, this divisional controller role, which ultimately led into international roles, right? This was a part of GE Capital. It was it was a very big organization at that point in time. And I saw the opportunity in this company that I was jumping into to continue to grow and develop and check boxes or add tools to my toolbox that would ultimately allow me to become the CFO. It was a very well-regarded company. And it was a company that I wanted to associate with and be part of and grow and develop with them. And that's the reason that I got on board with Genworth/GE Capital.
One of the things we've watched closely is how finance leadership has gotten, routinely more strategic. And it seems like executives like yourself who sort of grew up in this environment are already rather strategic, because they're so exposed to the commercial offerings and what have you. How am I doing? Am I close to?
Yeah. So what I would highlight to you, and this is one of the things that I tried to bring out, is when I stepped into the international financial, I got broad exposure. I joined the boards of two of the subsidiaries of the companies, and I began to feel the commercial equation, the operational equation, the technology equation. I went out and met with customers to talk about the product offering as part of those roles. And that's why I highlighted as being an inflection point for my career. I got some exposure. I met with some of our largest customers and watched people and how they interacted with our largest customer. And it was very developmental for me. And I highlight that because I do believe that the CFO needs to be strategic. We need to be broader than finance. I consider myself a business leader.
Yeah.
And the way that I've developed and cultivated that skill is through my experience being on boards, going to some of our locations where we own the business, getting out with customers and chatting with those customers. It's been a terrific part of my journey.
Well, I believe you enter the CFO office in 2023, and right now would be a good time to find out about Genworth Financial. Tell us who this company is today. What is this company about today?
Okay, so I when I was sharing with you my career journey, I said I've been here for 20 plus years because I'm so proud of what this company does, and I'm very proud of our people. I'm very proud of my team. we have two, and when I think about our mission and purpose, and this is, again, it's powerful to me.
Yeah.
Through an Enact Mortgage Insurance company, which we're the majority owner, we accelerate home ownership. And I'm going to take you down one level. So we accelerate home ownership. Home ownership is an American dream. We also, through our U.S. Life business and our CareScout business, we're starting new businesses, CareScout. We're empowering families to navigate the aging journey with confidence. And I'm going to talk a little bit more about the market in a minute, but the market, we have an enormous opportunity in this market because the aging population is growing, not linearly, exponentially or geometrically. If I take you down one level, we own 81% of this mortgage insurance company that we call Enact. It's a private mortgage insurance company in the U.S. They are a leading company in the U.S., and they provide mortgage insurance, which accelerates home ownership. And it's primarily their sweet spot is first-time home buyers. So these are low down payment loan. Without this product, people would not be able to get in that home. So we accelerate that home ownership. And indirectly, I would highlight that this really begins the wealth accumulation process for many young borrowers in the U.S., for many young homeowners in the U.S. Very proud of what that majority-owned company does. When I think about our legacy U.S. Life business, so we have historically in this business underwritten long-term care products, long-term care insurance, life insurance, annuity product. And our largest block of business is long-term care. We have over 1 million policyholders. We'll probably have one of the biggest blocks in the U.S. And if you think about that strategically, we pay thousands of claims, lots of claim dollars, and we develop intellectual property. We understand the aging process. We understand what services people will need as they age. We understand care planning and assessment. And so we're going to leverage that. And we're going to leverage this intellectual property we have in this U.S. Life business to create the next chapter in Genworth, and that's called CareScout. And so in the CareScout business, we are working to create a system, an ecosystem, I should say, of care and funding solution. And we're going to help people age more gracefully, more dignified, and in a more fulfilling way. What do I mean by that? We've created a network of long-term care providers. We call it our quality network, CareScout Quality Network. And we put those providers through screening processes to make sure that they're going to operate with high quality and provide high quality services to policyholders and consumers. And we're also focusing them and making sure that we understand they're going to provide person-centered care. That's very important. So in this journey and in this transformation of the company, Jack, we have right around 500 providers at this point in time. We're in 50 states providing these services. We're continuing to build the network actively. And also we are building the foundation to offer a new and better price long-term care insurance product at some point in 2025. A little bit about the market, because this is something that is quite telling here. What we call our TAM, our total addressable market, you have over 70 million people in the U.S. that are over 65 right now. It's the baby boomer generation coming through. You have over 70 million people over 65. You have every day until 2030, you're going to have 10,000 people turning 65. And our studies show that 7 out of 10 people will need some type of long-term care. So when I'm talking to the team, I use a Wayne Gretzky quote. I think I attribute this to Wayne Gretzky, the great hockey player. He said, "I'm not skating to where the puck is. I'm going to skate to where the puck is going." And that's what we're trying to do in Genworth as we start our next chapter in the journey of this company. So if I step back and I think about our strategy, we're leveraging a very strong private mortgage insurance company called Enact. It's a strong earner, strong liquidity provider. We have terrific expertise in our U.S. Life company through long-term care, and we're building CareScout to provide services to the aging populace, and we're going to build an insurance product as well.
Now,
That's it. That's Genworth.
can you boil it down for us in terms of your financial goals? What are your primary financial objectives for Genworth in the coming years?
So in the coming years, when I think about our financial goals, number one, and on many earnings call, you'll hear me talk about, we want to continue to buy back our shares. So this is on the financial side. We want to continue to buy back our stock. We believe we're trading well below intrinsic value for the economics and for the intrinsic value this company represents. You'll continue to see us retire some debt. At one point in time, this company was over leveraged, so you'll continue to see us retire that debt. We want to continue to build our holding company cash position and have a very strong holding company cash position. And then our financial goals, when you think about CareScout services, we're building businesses. And my experience in business development is it takes time. We want to continue to grow these businesses. We want to scale these businesses, and over several years, we want these businesses to become profitable and provide a great return to our shareholders. That's the way I think about our macro financial goals.
Just related to your debt reductions, can you discuss maybe the strategies that were employed to achieve this and the impact on Genworth's financial flexibility?
Yeah, so Jack, that's an interesting question, and the history of Genworth is pretty rich. And I would tell you, if I took you down in the details, it would take a while for me to explain all this. So I'm going to lift up and say, Genworth, coming out of the global financial crisis and even beyond, had some challenges, and our leverage was too high. So we ended up, and that is part of when I highlight my career journey and my inflection point, I was part of the process of monetizing some of the businesses, selling the businesses, raising capital. You'll hear more about this later, Jack, by the way. And selling and monetizing businesses, we took that capital and we reduced our debt. And in so doing that, we now have our leverage below 20%. We have a debt service that I feel comfortable with, that we can service every year. But our journey has been one of having to monetize some of our assets. Some of them were good assets to delever.
One of the interesting transactions, just looking at headlines related to Genworth, was the IPO for Enact Holdings, which you mentioned. And following the IPO, Genworth retained a sizable ownership.
81%.
81%. Yeah. Can you share with us, what were the strategic considerations behind that approach? Can you help us understand?
That is a great question, and it's twofold. And they're simple, but they were certainly strategic. Number one, we wanted to show the street the value of this asset we had called Enact. And through that minority IPO, and if you look at their stock over time, you can see just how powerful that transaction was to showing the value of that company. I'm not sure where they're trading today. There's been some pressure on the markets, as you know, but they have been 35-ish, and we monetize them well south of that. So we wanted to show the value of that asset. Number two, we needed to raise some additional capital. And so that is what gave rise to that minority IPO.
Wanted to just touch on investor relations with you. You shared earlier where you began to get that experience. You mentioned it, that you were able to obtain it. Lessons on your IR journey here, working closely with analysts. Can you share any insight, what you've experienced?
Well, I can tell you, I probably, so my IR experience began because I knew the international businesses that I was working with pretty well. So I had people that would take me to conferences with them. And so probably early on in my journey, I took people probably a bit too deep, Jack, and more deeper than they even wanted to. They wanted an understanding of our businesses, the businesses that we had internationally. They wanted me to teach them about those businesses. They wanted to talk about the strategy of those businesses, and then go maybe one level down. And they were always looking for tidbits that they could go back and put in their models, and details they could put in their models so they could come up with some type of valuation for our company. I found those opportunities very educational because I was always asked questions that stretched my thinking. They were always asking me probing questions. They were good questions, many of them, and it always stretched my thinking, particularly early, caused me to think more broadly about the business, to dive in a little bit more and ask more questions. And so that IR experience has paid off handsomely for me today as I work with the investors again.
No.
Particularly knowing what level to take them.
Yeah. I want to just touch on the economy with you. In light of some of the current uncertainties out there, what measures is Genworth taking to maintain financial stability?
Well, so first of all, I would just say all the uncertainty that's out there, I don't worry about the direct impact to my business. Okay, and I'll explain that. All right. I worry about the indirect impact. If I were over leveraged, which I'm not, but if we have a very comfortable level of debt, and I feel very good about the serviceability of that debt. I feel very good about the capital allocation that I've committed to the street around growth. And so I'm not worried about financial flexibility. What I do worry about is the indirect impact that the things that are going on in the market and the uncertainty around rates.
Yeah.
So, and our Enact business, our majority owned company, to the extent that rates stay high and there's not a lot of relief and the Federal Reserve does not lower rates, the 30-year fixed rate mortgage could put pressure on the mortgage market. And so it could curtail what I call the new insurance written in that market, right? So that it's not an immediate impact, but that's an impact on the inactives. Rates high on the life insurance side are okay because that means I'm deploying more investment at a higher yield. So I worry about the indirect impact of the uncertainty that we see. And I would have to say I worry a little bit about inflation and what could happen there because it could put pressure on our claims costs, particularly as it relates to long-term care. So inflation, care costs could go up. It could put pressure on our claim costs. That's the way I think about it.
It would be, we're speaking to a lot of finance leaders about artificial intelligence today and how it's impacting their businesses and the investments they're looking to make there. It would be interesting to learn about this industry. When you talk about AI and the impact it's having, what are you talking about? How does it impact this industry?
Well, for what I will tell you right now about Genworth is when you say AI, that covers a lot of ground.
Sure does.
Okay, covers a lot of ground. We, in parts of our business, have been using AI for some time, a lower form of AI on the left side of the spectrum. And I would call that machine learning. So we've implemented some machine learning techniques some time ago to particularly help with forecasting. You're probably talking about large language models, the AI and large language models. And I can tell you that Genworth we've developed our own AI task force. We see this as we are piloting programs right now. We're experimenting with it, always with a human in the loop. I'm sure you've heard that term before, always with a human in the loop. But we are getting ready and building the capability and the governance around those to implement this more broadly in our business. We're experimenting with some things on the finance side and piloting, some finance things. We'll be looking at maybe a software that we leverage heavily to experiment with. And also we'll be developing and looking at how can AI help us write narrative? How can it help us with the MD&A section of a Q or a K? But those are early stage things that we're working on, I would call those pilots at this point.
Yeah. You mentioned this task force. I'm wondering, and again, it's probably too early, but I'll ask the question, do you see new roles emerging to support AI adoption and missions?
I think inevitably you will see that. The one thing that we're learning is how you query these AI tools are very important. And that is a very simple example of how this could influence roles and responsibilities in any organization. You need to understand how to query, and telling it and putting in the right query is very instrumental in the output you get and the quality of what you get.
Just trying to understand how finance is monitoring the adoption of AI in different functional areas, and whether you feel you need to have that line of sight into that adoption.
Well, so we absolutely do. We spend a lot of time with third parties talking about what's going on in the finance community. Jack, you mentioned one of the things that we're experimenting with. It's a Microsoft product. It is getting, it is something that we're piloting at this point in time. But we spend a lot of time at conferences. We spend a lot of time with third parties monitoring what others are doing and how we may learn from them. I think that's so important. I believe AI, I believe AI is going to be a game changer for not just the insurance industry and the finance teams, but just more broadly. And we're trying to stay abreast of what's going on and make sure we leverage others' lessons learned. Live life lessons vicariously is something I've always learned through others, right? And we'll be monitoring that to make sure we're not missing something, because we want to be as efficient as everybody else.
Yeah. And forgive me, I'm just going to ask, and this might be something you can comment on or not. Again, I was speaking with a finance leader only yesterday, how they're doing off-sites with their employees to help their employees understand how large language models can make them more productive.
In response to that, I will tell you what I did was I have quarterly, what I call finance town halls to make sure I'm communicating with the broader community. And I brought an outside party in that was expert for AI and large language model. And I had them talk to the entire finance team because we have to learn. We have to, you have to have a foundation. Now, what I can't speak to is how many of the people after hearing this are going to embrace it versus those that may think, well, I'm doing what I'm doing and I want to continue to do what I'm doing. I can tell you this with the pilots that I have, the people that are getting these pilots and the activities and the initiatives are the ones that are excited about it. And I'm excited about it. So I myself will probably get experimented as well.
Meanwhile, there are some risks associated in the, data security, and we hear the algorithmic bias, a phrase being used these days. Is that clearly that's part of the conversation as well? And I'm wondering if your technology folks and the finance folks are having that conversation. How do we protect this data? How do we make sure this stuff isn't?
It is it's a very good point. It's why we have a governance framework. And you'll remember I highlighted human in the loop.
Yeah.
But because sometimes you get false positives, you get I forget the word that people are using these days, but exaggerations, you get different outcomes. So yes, we have a very disciplined governance process, because we certainly don't want to have data security issues related to our implementation of our piloting and then ultimately implementation of these large language models.
You said from the very early days on forward, you knew finance leadership was the lane you wanted to be in. It was the lane you were going to go down. We're asking you to share with us where you realized this really was something unique, this finance lane. What would you tell us?
Well, so the strategic moment that I would highlight, and it is some years ago, but it was, I previewed this a little bit as part of my international finance leader role. Genworth needed to raise capital. It was a very pivotal moment for Genworth. And I was in the right spot, Jack. I just happened to be in the right spot. I was, as international finance leader, trying to decide which of our businesses we were going to monetize to raise this capital for Genworth. And we knew we had to sell a big piece, but it was going to be a minority piece of a business. And we gathered as a team, and this was not just a finance team, this was a broader team. But as we gathered as a finance team to look at options, we had a very disciplined process where we had multi-year planning. Some people refer to that as MYP. We had a very disciplined process called multi-year planning, and we ran various scenarios. We didn't really look at the upside, although we probably should have, but we were looking at adverse scenarios, moderate stress scenarios, and I would encourage all the leaders to make sure they understand the downside scenarios in their business. But we got together with those plans and we discussed the strategy of our businesses. We had several international businesses, strategy, the business models, the regulatory framework, and then we looked at their financials and their forecast. And as a result of that holistic review, it became very clear which business we needed to monetize. And I would just say we were looking for quick execution. We needed to be quick. And we were also looking for a business that we could get a really good valuation out of, given the current situation and circumstances. The economy wasn't doing great. But I found myself in the middle of that. And we executed a minority IPO. We did it in a time that it was very quick. We raised the capital we needed for Genworth, and we did it at a really good valuation. And I can tell you this, the finance team leaned heavily into that decision. We made the right decision. We executed that minority IPO in a foreign market. And as a finance leader, this goes back to my career journey. As a finance leader, it gave me more exposure to the Genworth CEO because he was monitoring this very carefully. It gave me more experience to the Genworth board, and I think it was an inflection point for my career and an accelerator for my career. Somebody saw something in me at that point in time, at that moment, in that project, that gave rise to the development that I've had and the journey that I've been on with this company.
You know, you had observed CFOs up close. You just mentioned how you had collaborated with the CEO as well in the past. So you understood the C-suite, but still, in 2023, you got the title and all the responsibilities. There must have been something. You were surprised by something you wish you had known, you know, something that if you could go back in time, you could give yourself this piece of advice. What would it be?
Well, even though I started my career journey talking about teamwork and team sports, I would have to tell, my advice would be, you have to make sure you're leaning on your team appropriately. Even though you get that title, that grand title of CFO, you're part of a broader team. And the company that I'm in, there is no way that I can keep up with everything. And I don't know everything. But your team, I have a great team. And your team, when they're working together and they are self-directed, which my team is, lean on them, give them the autonomy and empower them to make decisions. And even though I had really good team experience, I would say that is something that I still had to put more focus on as I took the C-suite in 2023. Build a great team, let your team work. They will always come to you if they need help. And my team is terrific in that regard. That would be the moment. That would be what I would highlight you as something that I wish I had told before.
Yeah, and it does come full circle for us. So thank you for that. We always like to ask our guests to reflect a little on the personal side for us, Jerome. Is there something you'd share? Something maybe even your colleagues, as long as you've worked alongside them, might not know. Anything from your past? Anything you think about? A pursuit you have, an interest?
The pursuit that I have and interest. So I will tell you the one thing that I'm an early riser, but my team knows that because they often get emails from me at it's a decent hour, but it's early. It's early, Jack. So I'm an early riser. I get through some emails. I think about my priorities for the day, and I get a workout in. You may have heard this from others.
Yeah.
Exercise really level sets me for the day. It takes an element of stress out of the equation for me. I'm much calmer, which I think is very important. My team probably knows that, but personally, it is about getting up early in the morning, contemplating the day, setting your priorities, getting a bit of exercise, and then going and executing.
Was that always your routine? Did you have, is this something perhaps became more routine 10 years ago? Was it always part of your approach to the day?
Well, Jack, I've played sports forever.
Yes.
And I have to say, this is something that's been a part of me for a very long time. I would say that the other thing that I was going to highlight is having taken this role, the one thing, and I'm not suggesting this is about practice, but on Sunday afternoon, I normally get into the office and I'm thinking about next week. And I find that it's a quiet time that I can get. It is time that I can reflect and think about the week in front of me. And I have found that very helpful in executing against the week and 2 weeks and even a month priorities. I try to look forward. And so, but my team knows that too, unfortunately, because once in a while they'll get an email from me.
Jerome, quickly, I'm sorry.
Those are some personal things that I would highlight.
Very nice. Thank you for those. Sorry, I'm jumping. I realize we're getting close to the top of the hour, and I apologize. We always like to ask if you have a book recommendation for it.
Oh, plenty. I enjoy reading. I do not read as much as I would like to, but this one may be a little bit unconventional. But there's a book called Make Your Bed. It is written by William McCraven. He's an admiral. He was a former Navy SEAL. He gave a speech at the University of Texas at Austin, which went viral. And it is not a business book, but it is an outstanding leadership book. And I would encourage your listeners to read that book. It is something I've given that book to all my team. The second one, you'd ask the one, I'm going to give you three.
Okay.
Good to Great. That is everybody would recognize. I believe Jim Collins was the author of that. And my last one is, because I love sports, there's a book called Shoe Dog.
Yeah.
That is, I actually believe Phil Knight was part of the authoring that book. It's a book about the journey of Knight.
No.
Or Knight Beat. I couldn't put the book down. It's a fascinating journey. And so those are my book recommendations.
Excellent. Great selections for us, all of them. Thank you for those. We're up to our final question. Promise. We're going to ask you to look forward finally. And we want to know what your priorities are as a CFO for the coming 12 months. What would those be?
So people drive businesses, and I start there. So my focus will be on creating a culture, fostering an environment where my teams and the broader Genworth teams can thrive. I'm passionate about it. I want to see a culture where people know that they can speak their mind. We want their ideas. We want their innovation. So the focus on people, their development, and the team and that development is always top of my list. And the second item, there's many items, but I want to see growth. I talked about our CareScout business. We are skating towards a market that is really big, but we have to execute. And I'm going to be involved in that. I'm going to be watching that execution, trying to help that execution, because we're allocating capital. We're taking that capital, we're allocating it to growth, and our shareholders expect us to execute, and we're going to do that. So those are the two priorities I'd highlight for you.
Jerome Upton, thank you for joining us on CFO Thought Leader.
Thank you very much.